Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back to Big Money Real Estate. I'm Ilyce Glink. Here's your daily update. So today I'd like to talk about the world of hard money lending, which a lot of people call private lending, and there's some other euphemisms or other names for it as well. And I wanted to talk about the advantages and disadvantages of seeking out this type of loan if you're looking for investment real estate. We've asked Jeff Ball to be on the show today. He is the president and CEO of Visio Financial Services, which has been rated as the 5th largest hard money lender or private money lender in the United States. Jeff, welcome to Big Money Real Estate. Thanks for joining me.
Hi, Ilyce, and thank you for having me.
Sure. So there are a lot of other names for hard money lending, and most people are still thinking Tony Soprano, but I'm hoping you're going to tell us that's not really what it's like.
Yeah, no, it couldn't be any further from the truth. The business has come a long way over the years, and actually today there are a number of pretty significant institutional players that are focused on making fast and simple financing available for real estate investors that are really playing a very important role in redeveloping housing across the country.
So let's start from the top and talk about why real estate investors turn to private lenders or hard money lenders instead of banks. A lot of this is going to be different from commercial real estate versus, say, buying a house that's going to be rented out. But tell us about some of the people and the companies that you work with.
Sure, absolutely. So for real estate investors, these are really folks who own their own small business. Their small business just happens to be investing in single-family homes. And financing really breaks into two camps. On the first side, you have redevelopment finance, or commonly called flipping finance. And so this is finance that enables investors to purchase properties, to redevelop them, and then resell them either to an owner-occupier or maybe another investor who is going to rent the property. So that finance tends to be very short-term. Then you also have what is now called landlord finance. This is more permanent finance, although it still remains short-term. 5 years would be long-term finance. And this is finance that's available for folks that are looking to build or expand their existing rental portfolio. And so real estate investors turn to private financiers because they're not able to obtain this type of capital in a fast and simple manner from traditional financial institutions. And that usually has to do with either they already have too much credit on their existing properties, or maybe their credit is not as clean as it could be.
Or it could be like for the commercial property, maybe a regular lender, a bank is going to want to see that you've got an 80% leased property when in fact you're just at the beginning and you don't have 80%, but you know you're going to get there in time and want to start building.
That's correct. And I think when we focus in on single family homes, I think one of the important things to remember is that in this country, the vast majority of the single family rental properties are owned by individuals that own 1 to 4 homes. They do not have the same level of record keeping that you would see with an institution. So Right. It's very difficult for them to access bank capital.
All right, so tell us a little bit about the costs involved, because typically private money lenders, hard money lenders, you could be looking at interest rates that are a far cry from, say, 3.5% for a 30-year fix. So what do the deal numbers look like?
Yes, so private finance is more expensive. So when you're looking at short-term capital for improving and reselling a property, you're typically going to be looking at 2 to 4 points, and then somewhere in the 9 to 11% interest range. And that is for a loan that is typically 6 to 12 months.
So 2 to 4 points, 2 to 4 percentage points of the purchase price, and then 9 to 11%. And you want to see your money back within a year.
That's correct.
Okay. And what is the cost do you ever re-up those loans, or then they have to start all over again with the points and the higher interest rate?
Yeah, it really depends. We have one loan product that does offer a renewal feature, and We allow them to actually finance the renewal into the loan if they choose to do so. Different lenders offer different types of products out there, but
Sure.
there usually is some sort of renewal feature, and it's also heavily dependent on the borrower needs to have a good payment history.
So tell me a little bit, expand a little bit into that, because I know people who are watching this are always looking for this kind of bridge loan opportunity, which is what you
Right.
would be. If you're fixing up a property, you may need to float that cash so that you use the cash you have on hand to be able to do the fixer-upper, with the idea that once the property is improved and rented, it's going to appraise for much higher. You'll get more traditional financing. But when you go and you look at the investors, what exactly are you using to qualify them?
Yeah, so we focus very heavily on the asset, hence the term hard money. First and foremost, we are focused on the underlying collateral and making sure that we are not advancing too much money against that asset. That's the first thing that we're looking at. And then second, we're looking at a person's credit, their credit score primarily. And then third, we're looking at their investment history. So is this something that they're new to, or that they've had a significant amount of experience with? And then finally, we're looking for an exit strategy that makes sense. So if they tell us that they intend to improve it and sell it to an owner-occupier, we're focused on does that market look like it would support an owner-occupier?
So you really have to do a lot of forward looking to understand sort of what the exit strategy is and how it matches up with sort of actual marketplaces. What do you do when you've got investors who want to do a buy and hold, for example?
Yeah, so on a buy and hold, we're looking at if they don't already own the property, because we do both purchase finance and cash out refinance. If they're purchasing the property to turn it into a rental, we're going to be asking them, what do they think the market rent is? We're very focused also on third-party data sources, what those are telling us as to the available rent for a similar property in that neighborhood. And then we're focused on the condition of the property, because obviously a big part of the operating expenses associated with a rental property, is any deferred maintenance or future maintenance that needs to be reserved against.
How long has how long has Vizio been doing this, and what happened to you guys during the housing crisis over the last 7 or 8 years? How have things changed?
Yeah, so Vizio was actually born out of another business we had started called Econo Homes. And so Econo Homes during the recession was very, very active in selling single-family investment properties to investors across the country. So Vizio was not born until the other side of the recession, and has been originating loans now since 2012. And we're closing in on having originated 3,000 loans at this point, and we lend in 34 states.
Which is tremendous. And this puts you, it's sort of interesting, it helps people differentiate when you're talking about maybe hundreds of thousands of loans for some of the big banks,
Right.
and you guys are at 3,000 loans for investors. It sort of gives, and you're the fifth largest. This gives people a little bit of a sense of the size of the marketplace.
Yes.
Just as we're wrapping up, what are your best pieces of advice to investors who are looking at hard money lenders? How do they differentiate a good one from a bad one, from a Tony Soprano?
Right. So I think I would be looking at our mantra internally is fast, simple, and dependable. And for us, simplicity really means transparency around our requirements. You can go to our website, which is Visio Lending, and you can actually see all of our pricing and our requirements. So we try to be very transparent because the last thing that an investor wants is to invest time and effort in trying to obtain a loan, and only to find out that when they actually get to the point where they may have a deal, that the pricing or the terms look very different than what they thought they were.
Bait and switch, nobody likes that.
Yeah, so I would say transparency. I'd also be looking for, will they tell you who their leadership team is? If not, that would raise some questions in my mind.
I work with the Better Business Bureau. I always recommend that people go to Google search engine and type in the name of the company and the word complaints. Anything else that you'd probably want to verify that the company is actually doing business and has met all of its legislative or regulatory requirements, such as they are, just in terms of if you're a corporation, that all of your corporate papers are up to date, there are no complaints or suspensions against them. Anything else that you think that people should do to verify?
I would be digging into where does their actual money come from? Are they fully funded such that they're going to fund your loan, or are they going to need to gather funding prior to funding your loan? Because it's quite common for private lenders to have a pool of small private investors who fund their loans, but it creates funding risk for investors.
It's a terrific point. Jeff Ball is the president and CEO of Visio Financial Services. Jeff, thank you so much. Very helpful.
Thank you for having me. Have a great day.
We'll certainly have you back again. And
Thank
you. And thank you for watching this episode of Big Money Real Estate. You can send me your private lending questions on Twitter and Facebook, and be sure to share this video with your friends and family and fellow investors in social media. Until next time, I'm Ilyce Glink.